Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening as we're here now on Thursday, the 19th of December. It's snowing like mad in Chicago. It's lake effect. It probably won't last, but it's beautiful, I can tell you that. And we're sitting here now. What time do I have? My watch keeps turning on me here. We're pushing now 6:30 p.m. Central Time. So this morning, first thing that happened after the big break, the market surges on the opening, and I warned traders. I told them today in my updates, I said, you got to watch this market. It's the second, actually it was the last quarter of the day. I said, if you start making new highs in the last quarter of the day, you probably have seen a blow-off bottom. If you don't, if the market's making new lows, there's probably more to come. But if it doesn't do either of those, you're probably going nowhere. Guess what? You went nowhere. That's what happened. Now, tomorrow is important. It's triple witching day. You have almost, by some accounts, $8 trillion of options going to expire tomorrow. You have the futures contracts going off the board on the stock indices. You have ETF options, you have stock options. So you've got all this happening. It's monstrous. A lot of it, a real lot of it happens right on the opening. So be ready for that. It could mean anything one way or the other. In terms of the news of the day, the monthly personal income spending and PCE index report comes out. That's a big number report. Markets do pay attention. What they're looking for is on the income side up 0.4, on the spending up 0.5. I normally don't show you those numbers, but it's so important tomorrow that I like to do that. A hot number would add to the recent selling pressure, and lower than expected print will call for some of the recent reflation fears to calm down. So this is how I write, by the way, in my full market letter. So you get that, and I'll write the commentaries underneath it to give you what's going on. A lot of bullet points, a lot of what we do. The U.S. budget, it's being debated tonight. I don't know if it'll pass or not. I don't know what it says. I can tell you in press reports, they say that the debt ceiling is either eliminated or going to be expanded. I don't know which. And that the bill calls for a 90-day period before they get anywhere. So they would take you into approximately March. All right, so we've got that. Central banks today. You saw the Bank of England hold pat. You saw the Bank of Japan hold pat. You saw the Bank of Mexico cut rates a 1/4 point, and you saw the Riksbank out of Sweden cut their interest rate a 1/4 point. Now, when I look at what England did, I still think that there's a series of cuts coming. So I think they tried to hold everything, but I don't think it's going to work. And my guess is that we could be going down. When you look at the dollar, it closed over 108.15 tonight, and you're pushing now the 104 level. I have to bring this up. Are we talking possible 102, 110 levels that we go to? 102 in the euro, 110 or so in the dollar? Definitely. It could be a move that occurs there. So you want to pay attention to that. In the pound, I could target the 120 area, so we'll see what happens in that zone. When you look at the energy markets, it's doing this with the exception of nat gas, the cold that's sweeping in right now. Remember I told you it would be here for the weekend. Well, if you take a look at your weather maps, you'll see what's happening. That's occurring there. In bonds and notes, now, the curve yield's still doing this. It's going just back to traditionals. So it's recalibrated, and now it's just adding to that. So higher end, longer out loans have higher rates. Shorter have lesser rates. Just the way that it traditionally works, all right? So we're through with the COVID part, and the market is recalibrated past tense. In Bitcoin, as I told you, when you hit 108, it's not uncommon to get 20, 30% corrections out of it. You're already about 11%, 12%. We'll see if it can go the rest of the way. And I'm not bearish. I think the trade is waiting to buy the market on the break. So let's take a look. On the S&P, the big support in the market is 58.33, the 18-week moving average of closes. Tonight you hit 58.40. I'm in my ballpark, that's all. We'll see what happens here. You've hit this before and you have found support. Will we do that one more time? When you look at what's happened, obviously yesterday was the disaster day where the market lost tons of value in people's portfolio. Today was the attempt at a bounce. I've been there, so having done this as long as I have, I've seen these bounces, and then when it came out, I told my subscribers, and I think it was in my morning subscription, I think the one on the website, I might have said it. Said, be careful. Make this market prove itself in the latter part of the day. And you'll say, well, I got to wait that long? Yeah. And as it turns out, you closed right by the lows. And of course, now you've taken out that low. The market's looking to flush out traders. I don't think it's going to stay down here, period. I wouldn't be surprised that we get a rally back. I was watching Tom Lee today from Fundstrat, and he was talking about the market and how yesterday when you spiked up in the VIX and what the market normally does, and he says the month following, which is January, you normally go up in the stock market then and back down in the markets. He gave his reasons. I won't speak for him. And I'm not a bottom picker. But now what we've got is pretty evident. You've taken out yesterday's low. If you can get through today, Thursday's high, the market gets real interesting. Because that would then give you, and especially if you don't take this out right here, higher lows and a higher high, which would call for potentially a move back to the 18-day average to fight a battle. Not saying it has to go there. I'm giving you the what if. On the other side, let's assume that the market doesn't like the PCE numbers. They come in hotter than you think. The Fed's going to do it, keeping rates even maybe just one cut because of it. And remember, you cannot extrapolate on December 19th and tell me how many rate cuts or lack of them is going to happen next year. I mean, it's wonderful that people go on TV and do that, and I was one of those guys for many years. Don't even try it. To me, the most you can look forward is 90 days in the markets, in the stock indices and financial markets, and that's pushing it, all right? You've got 3 sets of reports in that time frame. Jobs data, PCE data, CPI, PPI, and go on and on. That's why it's so difficult. Trying to go through a year of all that, and you're going to tell me what's going to happen, and a new president with tariffs, I wish you the best. Lower highs, lower lows, still bearish. I've given you that scenario. Could be headed down here. So where's that Bollinger Band guy? Oh, right here. So you got under it, you tried to get over it, and you couldn't do it today, and you're still not over. So is it possible we're going to have suddenly 3, watch this, 3 days in a row of under the Bollinger Band? You have 2 already. Yes, it is. You typically don't go more than 5 before you climb in. Climbing in doesn't mean you have to go up. The market can latch onto it and still drill lower. In plain English, the most I see could be short covering. I don't see a trend change at this point in time other than you threw a dart at the board and you decided to do that. All the trends right now are down. I could even take, because of what just happened, this arrow and move it right down here and just say lower highs, lower lows. That's the new arrow. Are you oversold? Oversold as can be. So then we come to the NASDAQ. The attempt today failed right against where it should have. The 18-day average, the battleground, oversold. You've made the lower and low tonight. I'm going to repeat the whole pattern. Get yourself up and close over 6,092. Traders will think the worst is behind them. What about the Dow? You're down now to the 100-day average. You did that already. You keep checking it out with the Bollinger Band. You're oversold. If you embed, there's more coming. You're not there yet. You have, on a closing basis, and let's get to that if I could, on Thursday, both numbers were under 20. The day before, they were too. Were they the day before? I know they weren't. So day 1 of embedding, day 2, tomorrow they could embed. 2 things. If they embed, I look for even lower numbers than this. Second part, they often don't embed, especially on the downside. This would be a complete change of character for the market. It's had no problem embedding to the upside as the overall trend's been bullish. The downside has been rejected each time. So you look at things like that and you say, okay, the momentum doesn't seem to want to lock in on the downside. Could this be where the change happens? It easily could. This would be the first time since on this chart, going back to June, then you'd have an embedded reading. I didn't even look further with that yet. Then we get to the Russell, which I still say is the weakest of the indices, coming down. And if interest rates are staying higher for longer, you're not going to convince me fundamentally that that's a reason for the Russell to be good. Generally, those companies that make up the Russell are borrowing from the banks in a heavy manner. They don't have the big balance sheets that the companies in the S&P 500 or the Dow have, and they're more vulnerable to higher interest rates, and that's what I see going on in the market. 10-year notes. Look at the pain that this market's putting out there. So mortgages, 713, as I said yesterday, and today the 10-year at 4.57. I mean, these are big numbers that are coming, and all over television now they're saying, I think we're going to 5%. Well, when we were here before, the same people were saying that, and we didn't quite get there, so we'll see. In the 5-year notes, you're now starting to run the Bollinger Band. That's not good. Day 1, 2, 3 that you're doing it, you're not embedded, but you're trying to get that done. So nothing favorable. And you would add to that bearishness if the PCE comes in hot, and maybe you get some relief if it comes in on the not hot side, the cold side. We'll see. I see a breakout on the dollar to the upside. And you're going to say, Ira, what are you talking about? One of my rules is, if you get 2 days over the upper Bollinger Band and you're closing the very top part of those ranges, which you did, until you take out the most recent low, the market then starts looking at this whole area as its base. And in the base, the traders start buying, and ideally you get this setup where you have the higher lows, higher highs. The euro will be the flip-flop, but we did not qualify for the breakout to the downside on it. It's a little different there, but certainly in the bear pattern. Then we get to the British pound, and remember, we were fighting this battle. Which way was the market going to go with it? And in all fairness to the market, this is what you did Wednesday. It was the first day you were under everything, so the resistance, in theory, would be from the 18-day average, one tick over that high. The market challenged it, fell down to the Bollinger Band, and now the market is saying, uh-oh, it's certainly looking like the rate cuts are going to come in 2025 for this in order to save the economy, lighten things up on it, and that seems to be how the market's thinking now. When we get to Bitcoin, you were over the upper Bollinger Band and just came shooting right back down from there. Not uncommon. The market's challenging the old lows here. If you can take these out, maybe you go to the lower band. There's still momentum here that's missing. You have a higher high, lower low. That part of the bullishness is gone. You're failing, for the moment at least, at the 100-day average in the Bollinger Band on the upside. And closes under the 18-day average open the way for this market to start rolling to the downside and possibly here. Now remember, the higher the dollar goes in many parts of the world, because oil's priced in dollars, that makes oil more expensive. So you've got to remember how that works. In WTI, we have higher lows, lower highs. Then we take a look at the heating oil market, which, as I said, it's cold, it's snowy outside, and yet the market's having trouble right here in an overbought market, but the trend is up until you take out that low. Support comes in around 221.50, but you don't want to get under 221.19, be a problem for the market. And natural gas just took off. Now, natural gas, another good thing is happening. You know, President Biden, back in January, used the Department of Energy to stop giving out export licenses in natural gas. I was one of the critics. You heard me talking about it if you're a regular viewer, and I said, I don't get this. Why not do it? Help our neighbors in Europe get the LNG there. It helps American business. I'll never understand why they stopped it. I still don't get it. But now a report was released today that I have not seen, and it's interesting that Chevron stepped up to sign a 20-year deal as soon as a license is issued in Louisiana. I think it's Eagle Passes. I think it's the name of it. And once that occurs, and you should see all the other companies that have signed up, we're going to be in a big shipment business. Now, I don't know what the report said. I don't know if it's scathing and it says that doing all this is harmful to America because of blah, blah, blah. If it doesn't, then why did they do the report to begin with? I think it was politics at its worst. So you put this all together. This is what I write about. This is what I explain to you, point you in directions in my complete futures research. 2 updates a day. The one in the morning is always full of more material than the one in the evening. That's because in the morning I'm writing everything that's come out during the day and carrying you into the second part, often with graphics, as I said, a lot of writing with bullet points and so on. Buy-sell recommendations. I follow up with them in the morning. They are specific. We see how we did. I will not walk on water. If you're looking for somebody to have losses, I'll raise my hand, but I'll raise this one that I'll also have winners. That's what traders do. I'm sure there are people that don't. I'm sure that they don't have losers, that is. Access to the futures window envelope, real important set of numbers. These are what the charts will look like, and then I explain how to work with them. And you get this all on our QT mobile platform, including you can view charts and so on. So if you'd like to get this, all you need to do is go to iraepstein.com. In the top right, you'll see the word research. Give it a click. I'm Ira. I'll catch up with you in the morning, and we'll talk the PCE report at that time.